The best parts of the show always happen before the show. So we're getting ready to tape here, Stock Nerds, Market Lovers. It's Friday. It's Inflation Friday, the highest inflation since 1982. Volcker. Sunday. We'll kill inflation. Market's reversing as we speak, but we'll get to all that in a second. But Hunter says, hey, guys, I got to do something real quick. I'm okay to start the show, but can you not come to me like in the first 3 to 5 minutes? And I'm like, Hunter, I can guarantee you I'm not going to come to you in 27 minutes. Now, granted, me mommy wants me to go to you right away, so I'm mentioning you. Right away. I've got my Mimami quota, and I have said Hunter 4 times in the first opening segment of this show. But Hunter said, don't come to him, which means come to him. And anyone who's followed the Michael School.
Outed him.
Well, yeah, anyone who's followed the Michael School Office of Management program, right? Everybody knows that you do the opposite of what is asked of you. So I went to Hunter, came back from Hunter, and now we're going to start the show. And then Alex goes, see, I'm going to Alex too. I don't know if Alex has a Mimami in his life, but just in case, Alex goes, hey, that's a great picture of Don. Speaking of which, Stock Nerds, Market Lovers, it's Danny Stewart. I'm Tim Reazor. Hunter Mozingo, Alex Katutis, Don Vandenbord not with us today, but always with us in spirit. So listen, Stock Nerds, Market Lovers, it is Zach.
Yeah.
What time of year is it?
It's Christmas time.
It's Christmas time. So look, as we end 20, I'll tell you what, bring me up.
Yeah.
As they say in the audio world, will you pot me up, please? As we start entering towards the Christmas season, we get in the holiday spirit, and we sojourn, as you would say, into a new year in 2022. Let's have a chat, perhaps by a fireside.
Fireside chat.
Yeah, let's talk about a couple of things. And some things that have been on my mind recently with markets. Some technical, like you can use this to make yourself or save yourself some money, like right away. We're going to do that first. But then I've got something really interesting, and I think that's more geared towards a fire. But that is a good fire I built.
It is. Yeah, crackling.
You hear that?
Oh, yeah.
Yeah, you know who that is. That's one of the Rice Krispie guys.
Oh, is that who it is?
I think it's Pop.
Could be Snap.
Could be him too.
Sure could.
They make good kindling, I hear.
Yeah.
So funny thing. So we have a fireplace at the house, and I've got some. Let me exit out of this real quick. And I'll bring it back. Don't.
Oh yeah.
Don't think the joke's
For
not.
sure.
Yeah. Don't think the joke's over.
No.
So I've got youngins, right? I've got a. Well, we have a 13-year-old, and then we have a 4-year-old, and then we have a 20-month-old. You know, she's going to be 2 here. Nora, come April, and then we have 1 on the way. And so so we do not put the fireplace on because these people cannot be trusted. These people cannot be trusted around fire. Last time we had the fireplace on was when the entire state of Texas shut the power off, and so we put the fireplace on for that. So Nora and Remy, we can't. Where are they? I'm trying to find. I might have they're here somewhere. The internet's not loading right for Timmy right now. Anyway, they're here. That's Nora if she moves. Anyway, so I put on. We have Alexa devices, like with the screens, and so there's one in the kitchen. And so what I'll do is I'll put the fireplace on. I put just what I did right here. Like I'll put the fireplace on, and on the Alexa screen, so it looks like we have a fire going, right? And Remy thinks it's all cool, right? And so we left last night to go see Christmas lights. Some neighborhoods do it really big out there. Yep. And so we like driving around seeing the Christmas lights. And I swear to God, as God is my witness, we're leaving. Tanya comes back into the house. Now, I don't know if this was her pregnant brain or what, but Tanya comes back into the house. Like she got the kids strapped in. I was getting like one last thing, maybe filling a water bottle for the kids or something. And she comes back in, and I'm not making this up. She goes, Alexa, home. She put out the fire. I looked at her. I'm like, did you just put out the fire, like, for safety? And she looked at me. She goes, maybe. Like she literally put out the digital fire, and I'm like, God bless.
Anything could happen. Yeah, fire safety is important.
You're right.
Yeah.
Well, I'm notorious for leaving candles on, so so it must be ingrained. And Danny's like, yes, you are, and so it must be ingrained in her brain that always come back in and look for sources of fire.
Yeah.
I got a water spray bottle at the office.
She's got the Alexa device, and I'm like, oh my God. It was like one of the funniest things I've seen. But look, Stock Knows Market Lovers, real quick before we start. I talked about this in the video on Wednesday, and I just want to highlight a different facet of what I talked about. So I talked about moving average stack, and these there's a Revere Asset community out there. Okay, they live on Zoom. It's run by friends of Revere, and they're the ones who they do up these charts. They come up with strategy, and they're just a group of individuals that are like yourself. They like to talk markets and learn and grow, and so it's I don't have a better word than wholesome right now, but it's not like one of these crappy YouTube communities. I shouldn't have used that word crappy, but I don't have a better word right now. Where like they're just jawing at each other, or it's a tout service, or buy my penny stock. It's nothing like that. It's just really great people going, hey, has anyone seen this facet? Or what if we tried this? You know, like they're just learning from each other. And that I think is awesome. And so anyway, it's a digital meetup, if you would. And they do it on Zoom, and there's different rooms. But the white bar is theirs. And so, and I was talking about like when you get a white bar, you don't get many white bars on a daily chart of the S&Ps. And I went through the different indices. And I highlighted that when you get a white bar and the moving averages aren't sequential. And you can go back and watch this video at Revere Asset. I'll show you where to find it here in a second or two. But you want like the 5 on top of the 8 exponential, on top of the 21 exponential, on top of the 34, the 50, and the 200. When you get a white bar with sequential stacking, those are pretty powerful, right? And so you kind of want to pay attention to those. And so...
Can you explain the white bar so people know?
Oh, yeah. Okay, there's a few more entities into what I'm going to say. But what I don't want to do is overwhelm people. At the heart of it, it's price and volume, and it's momentum. It's a 5-8 cross with volume. There's other factors into it, okay? So, but then I got thinking about this, and so this is the best part about this community. And I don't spend my days in there. I just kind of... Boy, I need better words than lurk and crappy. I mean, if
you don't lurk in there.
No,
that's good to know, Tim.
Right,
we don't want you lurking around.
Yeah, right. Like lurk it's not a good word. Like lurk is what you like. It used to be romantic when you threw rocks at the window and held the boombox above your head.
Sure.
In 2021, you're just a stalker when you do that. Right?
You're lurking.
Yeah, you're lurking.
That's
lurking's not good. So I'm like, well, what if we did equal weight? So let me give you the site picture real quick here, Stockner. So what you're looking at are the S&P Futures on a daily chart. And I'm like, that's an interesting site picture that I see here. And I'm like, well, wait a minute. What if we did RSP? Is it different? Like, do you get clear signaling? And so, well, what would be the difference? So with the S&Ps, whether it's SPY, S&P Futures, they're weighted. And they're weighted by, like Tesla is the number 10 stock in the S&P. Market cap, yeah. Apple, of course, holds sway. But what if you just equaled them out? Like Danny, like Danny.com is worth as much as Tesla. You just equal weighted all the 500 stocks. Do you get
so each stock is 1/500th of that index?
There you go. And I thought now this is the truth here. I only thought of this on one of the drives with the kids picking them up from daycare. So it might have been yesterday. It might have been this morning. I don't know. It all blends together after a while. But I have not.
The noise in your head.
Yeah, like it's filled with, honest to God, like it feel like I was like, I got to remember to tell that Alexa story, and then I got to make sure Zach knows I want to have a fire.
Yeah,
like after that, it's whatever there's room left for, right? Yeah. And so, did I take all the kids out of the back of the car? Like, always a concern. And by the way, Nora sounds like a pterodactyl.
Oh yeah,
yeah, like she, like it is like we gave birth in a Flintstone era, and the baby squawks.
What does that mean? She screeches a lot? I mean,
oh my gosh, does she screech? Okay. like she is, like her way of communicating, it sounds the same. Like every word. So to give you an example, like imagine a dog that does the head tilt.
Now, was that asking for milk, or I got to go potty?
Yeah, well, you got to figure it out. Yeah. And this is the thing. So Remy's on this kick. Remy loves his sister. So Remy's like, Nora, can you say the word fence? Huh? She said fence. I go, okay, maybe. Nora, can you say the word truck? Huh? Same damn sound. She's got her own language. And Remy's like, she said truck. And I'm like, after 20 minutes of this, I am getting into heaven because I have not complained once. That she ain't saying anything different here.
Right.
But Remy in his heart believes he is teaching her how to speak. It's just different levels and volumes of squawking right now.
He speaks Nora.
Maybe that's what it is. But it is a lot of squawking, and it is loud. Girl's got some pipes on her.
The apple doesn't fall far, huh?
No. When she said, you know what she told me?
Oh.
She's going to get to 130 minutes.
Oh, yeah?
She's not even going to come to Hunter. She's just going to, she told me in the car, hey, I'm just going to squawk right over him.
That's right.
Yeah.
Yeah.
And so here we go. I like that joke.
Yeah.
And so here we go. So
Tim's entertaining himself.
Tim's got it.
I often say that if I'm bored, the listener is bored.
Not today.
No, not today. But if I'm animated and I'm enjoying, that's the other thing about markets too, by the way, that markets will wear you down, right? Like this time of year specifically, I have found that if you've been staring at the charts all year or fretting's better. Boy, that's a good word. Fretting. You just say, does anyone say fret anymore? Am I like
you just did.
Am I the first person today? Do you think in the world anyone said the word fret other than me? I'm going with me.
Yeah.
Yeah.
Definitely.
Fret. So people are fretting over inflation is at 40-year highs. Come on. Hey,
4-year highs?
40 year.
40,
year.
okay.
Yeah, like so when someone said, hey, what did you accomplish this year? What did you achieve? I mean, the U.S. government stands and goes, we got inflation at a 40-year high. Yes, we did. Yes, we did. And then Kamala says, we did it, Joe. And so this is political as I'll get. And so, and every time I pump gas and someone puts those I did that stickers on the gas pumps, makes me laugh every time. I can admit to that, folks.
Have you seen those around town?
Oh, my gosh. They're all everywhere. And so they make me laugh.
I think there's more of them in Rockwall than they are in my part of town.
I found them down in San Antonio too.
All right, I'm getting off base. I'm sorry. Go ahead.
No, they're down there.
Yeah.
What is down there?
The I did that sticker where it's Joe pointing to the gas price.
Yeah.
Yeah.
It's a picture of the president.
When were you down in San Antonio?
I'll tell you later.
Yeah.
So it was over a weekend. So not for very long either. And so but they're everywhere. They're at a lot of Buc-ee's, I'll tell you that much. A Texas icon. And so anyway, back to RSP. So,
which is the
equal weighted
S&P,
1/500 of a price move there in the stock. So anyway, do you get better signaling? And I noticed right away that if you go back to the S&P Futures chart, you can go back and forth, stock nerds, just pause the video, rewind. There's more moving average stacks in the S&P equal weight. It's easier. What I'm trying to get at, it's easier. It's easier to decipher. I literally looked at this 2 minutes before. And I'm like, because I didn't really put too much study into it, but the first thing, and that's the whole thing about markets too. The information that you're trying to trade or indulge in should pop out at you. If you got to stare more than 4 seconds at a chart going, is it for me? That tells you it's not for you. Right? If you got to find ways, just drill it down. If you're the car doesn't feel good when I sit in it. If you got to find ways to make it work for you, it probably isn't the best fit for you. And you can say that about cars, clothing, spousal units, stock charts. And so, look at this here. I've noticed right away that when I get a white bar signal, I've got more moving average stacks. And that to me is probably an easy, right here's the first one I see where we don't quite have the moving average stack and over here. And look at those results, right? But that's only 2. And the other chart had many more. And so I think a way to make life easier on you, because when I was thinking about markets grinding people down, they get tired. This market, we were talking earlier, let me show you stock nerds. It's Tim, what do you mean this market's grinding people down? It's great. Well, before you go too far there, Tony the Tiger, let's look at a 5-minute chart just of today. And so you're well, Tim, what am I really looking at here? Well, let me zoom in here. You had a market that was up at 4,700. You're already 25 points off. Those, and Danny, those used to be big moves. Mm-hmm. Those used to be big moves. And my thought after the inflation data came up and the markets went higher, I'm I bet you they sell into this. Now, whether they sell it off is a different story. But the facts are now, that you have this massive price inflation. And by the way, it's backwards looking. J. Powell clinged, no, without dying.
I know it's not clanged.
Clang, 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 went the J. Powell. Ring, 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 went the, anyway. When I get Alex.
Noises in Tim's head.
When I get Alex, I
No,
know.
I'm laughing because there's a picture of Don holding the trophy.
Don holding the trophy. Yeah,
It's
sorry.
like really good timing.
That's what Zach does, man.
Yeah.
So
The timing was impeccable.
like
you.
J. Powell clinged to transitory, hoping that it was all backwards looking, and it hasn't been. Well, maybe next month it'll be. Maybe next month it'll be. It can't be transitory with the wage inflation that's taken place. Things have to cost more to pay people more, and I'm amazed. Like, and this is a serious thought. Starbucks is paying people $15 to $23 an hour.
$22 an hour.
To serve coffee, and that's, I'm not demeaning Starbucks. That's not the point of this. But if you're doing something that's really taxing on your body for work, and it's the same pay, why wouldn't you go to Starbucks, which needs help too?
Right.
Like if you're on your feet, like I guess Starbucks are on your feet, but like if you're like lifting, I don't know, concrete boulders for a living at $15 an hour, Starbucks is going to pay you $5 more an hour to come in and lift coffee cups and just be a genuine, great human being. I'm doing that all day long.
Tim, I got a good story to parlay off that.
Oh, go ahead.
So my uncle has a kitchen and bath company in New Jersey, and there was a summer. He's like, "You want to come do a little work?" I was like, "Yeah, sure." So we were demoing this kitchen, and I was helping bring stuff all the way down the stairs and throwing it in the dumpster. And after 2 days, I laid down on that couch after the 2 days of work, and I looked at my dad and said, "I am gonna definitely bust my butt in school. There's nothing wrong with hard labor. I guess I wasn't cut out for it. It's one of the hardest jobs is to do, like, whether it's landscaping or demoing or construction. Props to people that
Reality check.
Yeah, and
Yeah.
so I mean, think about this. If you want a big macro view, like people are getting out of like football early. They go and make their money, and then they're done because it takes a toll on you. And so, I mean, it's great when you make it, right? I mean, like this many people make it into the NFL, but before you can get paid. So anyway, I think if you really want to up your game here and so make life a little less taxing on you, I think like if you look at QQEW, like you look at the equal weights, I'm going to get this off of a 5-minute chart, and I want to make sure.
What is this ETF?
Yeah, the equal weight.
Oh, it's the same. Okay.
Yep, QQEW. Gotcha. We're on year-to-date charts, and now I'm just looking for white bars, like white bars with moving average stacks, and like they're not here, but I think the equal weights are easier for folks. So if someone is out there formulating their trading plan, and they're like, well, what can I do to be more efficient with my time? Might I suggest? And you can do double equal weights. There's double ETF. If you want the volatility, there's a double or a triple for you out there. And so you can find equal weight. I mean, you can find double equal weights in most of the ETFs out there. And so, but I think the equal weights are easier to trade. And if you're like, well, I don't even want to trade them. I just want to know what's going on. Great. Let's look at this equal weighting. Let me show you this right here, and then we're going to get back to our fireside chat. This is a daily chart of the NASDAQ equal weight. So Microsoft equals Apple, Apple equals Tesla, Tesla equals Oracle, Oracle equals Salesforce.com, and so on. Okay?
And equals the bottom 100 you've never heard of.
That's exactly equals 99 and 100. Okay? Look at this. This isn't a moving average stack. What is this?
This is so useful. It gives a true indication of what's really going on.
Let's just pause the show there for a second. When he said this is so you, and I'm like, please say not. I didn't know if he was going to say less after the letter U, and I'm not being facetious. I literally said, Jesus, Alex, we're live taping your shows. Please, like there was a millisecond.
Edit that out.
There was like a split second. Like my body shivered. Like
your heart stopped. That stopped your heart.
I literally was like, thank God I'm a graduate of the Connecticut School of Broadcasting upstairs from the CVS, because you couldn't tell outwardly, but inwardly, I literally pooped my pants.
Really?
Oh, I was like, I didn't know where he was going to go. And I'm like, I was about to say, mark the tape.
Oh,
We got to take
I
it
wouldn't
out.
do that to you, Tim. Come on.
This.
But he went with full, not
Yeah.
less.
This is useful.
This is useful.
This is good.
It is very useful.
And no one's more happier than me, because for a split second, I was like, okay, and where do we go from there? And so look at this chart, though. Like, this isn't great. Like, this is middling. This is just like, This is like, hey, you went on a date. How'd it go? Nah. Hey, well, did you enjoy dinner? Nah. Like, it's not awesome. But like, when you look here, like, let's look at QQQ. It's gonna take us a that site picture is much better. Stock nerds, what you infer from this? Now you're like, Tim, I don't like your jokes. I don't like the jib of your mug.
The what? The
I went.
I don't even know what that means.
Yeah, what is that?
I think he just made that up.
Real phrase?
Is that like a West Pennsylvania rural?
I think it's in the 1800s.
What the heck was that?
Jib of your mug.
Jib of, how do you spell that? Jib?
Is that a slur?
I think it's got to be
That's
J-I-B.
making the highlight reel. Jib of your.
Don't get jibbed.
Yeah, don't get jib. That's true.
Oh my gosh!
Don't let the market jib you.
That's those folks are the
That's
noises
classic.
in Tim's head.
So what you can
That should be the title of the show: the noises in Tim's head.
I don't know if anyone will click on it though. That's the problem.
Yeah.
So so here's the thing. Like, you look at these two charts, the equal weights, S&P, Qs, doesn't matter. Now, you don't see it on my screen, but what you're really looking at is a picture of what, Daniel? Breadth. The breadth of the markets.
Well, it tells me that the large mega cap, certain companies up there are doing well and
Exactly.
holding up the indices, but small cap, mid cap, the other
stocks are
struggling.
not doing
Yes.
it. And so that's a warning sign. Eventually, look, it doesn't mean the markets, and so I say this, it's price before conviction. Okay? You think something is up, but until until you get the kindling that lights the fire, you don't take action. Okay?
Or Alexa.
Or Alexa, right?
That's a fun
Yeah, like until you fire up those. Like, by the way, every time we mention Alexa, I bet you people's devices are going off. So if we said, Alexa, open Fireplace.
Alexa, light my fire.
Oh, I wonder if they're going to play the Doors now. Interesting. So when you look at this, you're really looking, and you compare the charts, you're looking at the overall breadth of the markets, and the breadth is not good. That's a problem. So if a couple stocks, and they're big stocks, because Apple can absolutely lift the overall markets. Let's not make any bones about that. But if eventually they get weak. And in those markets, when it's a couple stocks doing all the heavy lifting, when they don't have to crumble. I'm not saying they're going to crumble, but when they need a break, and they just got to go sit down and take a rest.
Puts market under pressure.
Oh my! But it's not just pressure; it's immense pressure. It's swift pressure.
Yeah.
It's fast pressure, and therein lies the problem. I want you to look at let's look at the Nasdaq futures. Nasdaq futures. We ended the morning call. Danny, Don, and I. We ended the morning call. Nasdaq futures were up at 142 points. Nasdaq futures are now red. Okay. I think it behooves people, as we go into the end of the year, to take a gander at equal weight charts. You're going to get a truer sense of what's really happening under the surface, and what's happening on the surface, in my opinion, is not good. I didn't voice it on the call. I wish I did. Sure, you thought that, TM. Well, it helps when I voice my thoughts. But as Danny noted, there's a lot in there, and so all the voices don't come out. And so it's like, I bet you they sell into this, because this is not transitory, and it's not going away. And we know that wages didn't go up 8% this year. Inflation did. Wages have not. That's a problem. We're not all on electric vehicles yet. The energy inflation is real. More trucks are sold in America than any other vehicle, to the point where Ford only makes one car, the Mustang. That's it. They gave up on cars a couple years ago. Like, we can't make money here. What do trucks do? They take more energy. What does it cost to produce food? Energy. If energy continues, and you're like, well, Jim, pull up that chart of crude. Crude's not in an all-time. Look at that. Crude chart's down. Inflation is here. Imagine I don't have a good example. Crude energy costs were just like the start. Like energy costs going up were just the start. Okay. Now the fire's lit. Everybody needs to get paid more. Well, how do you pay people more? You charge more. You charge more at the pump. You charge more at the store. You charge more anywhere.
Oh, but politicians have already said that just because you have higher cost inputs for the companies that are inflated, that doesn't mean they'll pass them on to the consumer. What?
So it's here. So now what do we do? Well, J-Pal has done might I say, the best job at telling you what he's going to do. Make no bones about it. He screamed it from the rooftops in front of Congress. Like, no one can be in denial about what's coming. I'm going to slow this down. I'm going to, even though I'm going to be buying bonds still, I'm slowing the train down, and come spring, I'm probably raising rates. Be prepared. And
Any wager on that?
well, whether it happened, the only way that let me help people understand what Danny's comment is here. Danny's saying, I doubt they can do it. And what Danny, I don't want to put words in Daniel's mouth, but what Danny is truly saying is this market will get J-Pal before he gets to the market. I explain. The market will pull back so sharply that J-Pal can't raise rates. And when he says it can't raise rates, the market will grab
Well,
it.
not only for market, for economic reasons and for market reasons.
Right. They can't kill this thing, but they need to shock it. So anyone ever shock a pool to get it uncloudy? Anybody ever
Yeah. Well, I think he'll jawbone about it enough just to spook it.
And that's what's going to happen.
You don't think he'll actually raise rates?
He may raise rates quarter point or maybe half a point, but there's no way he can raise it in earnest like he really probably should as a responsible parent. But no, if he raises rates
hold on,
in
pause.
earnest,
We need hold on, Danny. You're clearly doing fireside chat type stuff.
Right.
Come on. Let's
Sorry, go ahead,
Let's make
Danny.
sure
Yeah,
we're a pro.
let's make sure we've got this
Geez,
up.
Danny, when you're going to go into warm knowledge, Danny, not spice rub, Danny. We need the mood set.
okay.
Now, is he really going to raise rates?
If he tries to raise rates in earnest, you're going to explode the deficits because the cost of borrowing for the government goes way up. You're going to hurt the housing market significantly. Refinancing will absolutely come to a halt, and you're going to have the cost of borrowing go up. They box themselves in the corner. It's a Hobson's choice. By the way, they caused this problem to begin with, with loose money on the front side.
Right.
So now you're asking the same people that remember, we're trying to get inflation up to 2%. We're going for a target rate of inflation at 2%. Mm-hmm. They got it times 4.
Here's what I think is going to be the best sector to invest in 2022. I'm going to lay. What is today's date? What is today's date?
10th.
10th. 15 days before the baby Yazoo shows up. 15 days. By the way, saw the best pun about the Blessed Virgin Mary.
Oh, yeah?
Yeah, would you like to hear it?
Please.
No, see, I just wanted to make sure.
I wasn't sure. I wanted to see if Danny gave me the signal. Go ahead.
So,
just be careful. Have
mark the tape.
Ready.
Have that
perhaps we should
Look at where we are on the recording.
Did Alex say useful or useless?
It's true.
Yes.
Go ahead.
So, the little quote goes, it was meant to be like a Bible verse or like one of the stories in the Bible. Mm-hmm. As Mary finally got the baby Jesus to sleep that night, a little boy showed up with his drum and said, "You know what this woman needs? A drum solo."
Solid. Fair. It's a good one.
Yeah.
That's fine. That's totally fine.
See,
not
useful.
bad.
Alex.
Well,
you know what?
You never know with Tim.
No, you
From
don't.
now on, what
Yeah.
we're gonna do is we have now on mark the tape here, Zach.
Yeah.
On December 10th, 2021, we created the Alex Useful or the Alex Useless scale of rating things. It's either useful or it's useless, and we attribute it to
Oh
Alex.
gosh, I am not that big of an egomaniac to judge it. Come on.
Yeah.
No, we have got it. Was it useful or useless?
one or the other.
It's those small jokes. Like, it'll be a year from now, and like every now and then we'll just slip in. Was it useful or useless? Only people who listen to this episode will get the inside joke. That's why we try to let people into the tent. We try to backtrack slightly every now and then to get more people in to enjoy the inside jokes, because that's what makes, honestly, the show fun. By the way, speaking of which, is before I get to the best sector of 2022, the markets can be a grind. Like, they can really wear you down. And so I think this is an awesome time to step back, reflect, recharge, find a way to recharge. And that's why I believe our role in this universe is to always provide useful, helpful information. But we can't treat finance like it's this cathedral. Oh my gosh! If you want seriousness, turn on the news. Go read the crime blog in your local paper. Like just live life. Like, there is such a thing and a value to escapism, and the fact that we found a formula to give people an escape for maybe 50, 110 minutes. I promised Danny I'd be out in 57 today. Like to give people that out and just enjoy and learn at the same time. Come on, people. It can't be that bad. And so the best sector. So Danny, let me just recap Danny's thoughts as we re-engage into the fireside chat. Danny's saying that they're going to slow the economy down, and that'll be bad for, you said, jobs, and you see.
The sad part is they may not even do it on purpose. Congress may screw up the economy. I mean, it may not even be on purpose.
Sure. But here's what I believe, that I believe savings, and just because of reading, it's not like, well, I believe it. No, I've read it, but I do believe that savings are at an all-time high. Mm-hmm. That I don't like saying historical perspective, because I don't think it's relevant what my parents paid for a mortgage whenever they paid a mortgage. Historical perspective is now like 10 years. Like, what are mortgage rates now, right? You know, by Danny's parents' historical.
Well, that's again because the Fed of manipulation.
Understood.
Totally outside the bounds.
I do think rates are going to drift higher, but within recent memory, they're still going to be towards historic lows. Mm-hmm. And any slowing that Jay Powell is going to do will positively affect the housing market. Hear me out. So I do believe that the best sector of 2022 is going to be housing, construction, materials, people building things, people moving into things, restoration hardware, filling your home with things. Here's why. We need it to slow down. There's so many people out there looking for homes right now. And it's still, even though it's slowed down from this frenetic pace earlier this year and last year, the builders are still, they're not, the supply chain hasn't caught up. They're still squeezing people. There's contracts that are still being written that are giving the builder the ability to squeeze tens of thousands of dollars more at closing out of prospective home buyers. And if the home buyers don't buy it and they've already sold their home, now they're out in the street. Like, that's still happening. And listen, if you're a stock nerd yelling at me right now, just look around where you live. If you're in Podunk and it's not like that, it's because you're living in Podunk.
It's location.
Just think outside of your bubble for a minute. How dare you talk to me like that, Tim? Look, I get your emails, people. I respond on the air. So it's like that in a lot of places. And by the way, just because it's like that here doesn't mean it's like that everywhere. But I'm seeing enough that I believe it's a lot of places right now. It's off market. Well, what's off market, Tim, for housing? Oh, spring. Spring is on market. Kids getting ready to move. You want to move in summer. You want to start the new school year. Families drive market cycle in real estate. Homes are coming in this part of North Texas now. That is very local, and we're a global show. But in this part of North Texas, homes are coming on the market, and the average is a week on the market still. And the average is a week. It's December. Who the heck wants to move before Christmas? The demand is still there, folks. And so it is my belief that a slowing down of things, stock market, economy, is going to allow some of these supply chains to catch up. And the people that have been waiting to buy homes are going to en masse come out of the woodwork. And all the homes that I think housing is going to be where you want to be in 2022. And that'll probably satiate the demand. 2022 is probably the year we start to satiate the demand for housing. It hasn't been satiated yet.
It'll be interesting to see. And again, we always rely on price and volume, so it doesn't matter. But some areas are actually starting to exhibit slowdown. Now, Texas and Florida are just booming.
Right.
They're
Booming.
booming.
No income tax.
Yeah, and so you got political reasons for that.
Yeah.
But because it's a friendlier environment.
Right.
So you've got people to work here. You know, an interesting fact I saw that the traditional family has actually dropped to a 50, 60-year low, where it's only 19% of the population just 30 years ago. It was 19 million. Yeah, it used to be like 40, 45. So that's kind of interesting. You say that, the families are the people that drive the move. I'm curious to see if that continues.
Danny, have you seen my child output? I am picking up the slack.
You're picking up the slack
for everybody.
You're definitely picking up the slack.
Yeah. Someone said, "How many kids you have?" And they just looked at me like, "You had a good pandemic," and I'm like, "Yes, we did." And so listen, I think housing is where you're going to want to be. I think there's multiple ways to play it, right? We can.
Lowe's has been doing really well.
It could be that simple, right? As Lowe's as Home Depot. I also, the home builders, I haven't looked at any of these charts, like LGIH, DR Horton, Dr. Horton. There's multitudes of ways to look at it, but I believe that's the area that's going to shine. And I think it will. Like we'll hear stories like homes are staying on the market a little bit longer, but that's what's going to get people to come out. They're fearful right now that they're not going to even. Why even try? They spent 6 months looking for a home.
You're saying there's people waiting in the wings for a pullback to come back in and buy.
And they investigated homes. Yeah. They went out and investigated homes, and they're like, "This is stupid. Why are we wasting hours on a weekend?"
It's me. I'm doing that.
Oh.
Yeah, my wife and I wanted to buy a house this last year. We looked for 6 months. We were like, nope, just going to wait.
There you go.
Yeah.
I think 2022.
I'm on the show when I do that.
Yeah, I think 2022 is your year to shine.
Probably.
I think people get spooked by whatever happens in the market, whatever happens with fiscal policy. And then, but you're going to be like, wait a minute, prices are, I'm not saying they're dipping.
Yeah.
I'm just saying that it's not this massive rush, and it feels unresearched. You're waiving inspections.
Right.
I think tiny bit.
Yeah.
Poquito. A bit of normalcy comes back.
I hope so.
Yeah, I do too. So listen, continuing on with the fireside chat. Target date funds. Completely different. So Danny, I want to be careful here. I don't want to reveal too much because we're like Dragnet, man. All the stories you're about to hear are true. The names have been changed to protect the innocent, or whatever the intro to Dragnet was, right? Whatever that intro was. Just
the facts, man.
Oh,
Just
hey, let's get a Dragnet Joe Friday on the and something else, like as part of your background.
To be honest,
put it where Don is.
I'm definitely culturally lacking on Dragnet information.
Oh, that's all right. You can figure it out. It's the Google.
Dragnet might be beyond my pay grade.
So. First time those words in a sentence have been uttered together.
Maybe.
Dragnet may be on my pay grade.
Dragnet may not, yeah.
So Danny has, listen, people come to us all the time and they're like, will you evaluate this annuity or this insurance plan? We don't sell stuff like this. And so you're getting really unbiased look at products that people are trying to sell you. And one of them that came across the transom was super interesting. And the thing that stuck out, like, and we're going to go do a deeper dive on this, maybe towards the end of the year or at the start of the new year, maybe on this very particular one. But the obvious are fees and a bunch of other things. But the one that stuck out to me, the facet of this plan that stuck out to me was the staticity, the lack of movement, the lack of fluidity in this plan. This plan had, they weren't target funds, but they were specific increment amount funds in it. This annuity, it had, it doesn't matter what it is, and I don't want to actually tell people what it is, but it was a 70-30 mix of something and something else. And my very first thought when I saw this was, well, what happens if that's the wrong mix?
Well, or if it changes.
Well, hold on. I want you to think about this as like, and Danny's right. Like, I think in picture. I think in analogy. Like, so there are like voices that that's how my mind works. I see in pictures, and the picture that popped into my head was, how many years do they get the flu vaccine wrong? Because they have to guess at what variant of the flu is going to be out there. And if they guess wrong, more people get the flu, like if you take that vaccine or not. And I'm like, well, what if this is the wrong mix? And so let's pretend that this was heavy, this was heavy bonds, light stocks. See, this is the problem with staticness in any portfolio, whether it's an annuity or a target date fund. And if you don't know what target date funds are, like imagine you're 21 and you're going to retire in 2075. So you would buy a fund labeled 2075 target date fund.
Boy, you started work awfully young.
Okay, let's say that you're in a target date. Let's say that you're Joe Friday from Dragnet, and you're going to retire in 2030. Mm-hmm. So you're in a 2030 target date fund, okay?
And 10 years later is 2040, 2045.
Yeah, yeah. And so what these funds are designed to do is stay with you for your entire journey through investment, your best working years when you can invest in yourself. Sounds great on paper. Here's the problem with staticity, the act of being static, not moving, rigid in your thought process, might I say. That what if the facts change? So as you get older, these things are designed to have a glide path to retirement, meaning you would take less risk and more stableness, right? And that would smooth it out. Like, we're just going to glide in there. What does that mean in the investment world? Well, folks, that means less equities, more bonds. So as you approach that last 10 years, and especially that last 5 years, we're getting more and more risk adverse. Every day that ticks by towards your retirement date, towards the target date, we are going to take less and less risk, to the point where you don't even go outside anymore. You draw the blind shut, and you're like, no. You're living like Howard Hughes.
Draw the blind shut, wear a mask inside.
You're Howard Hughes. You're not going anywhere. You're just like air purifiers, sanitizers. You're the person wearing a mask inside your car.
Can I put my Tim Turpin on for a minute?
Yeah.
Because you talked a little bit in analogies. Bottom line, you pick a target 2045 fund because you're young. Mm-hmm. So you don't retire to 45 years. So you pick that one fund and stick all your money in that.
Right.
And they do a pie chart for you. Well, in 2045, it's all go-go emerging markets and tech stocks.
Right.
As you get older, like Tim said, you get to 2035, then it's about a 60-40 mix, 60 bonds and stocks. Mm-hmm. The last 5 years, it's going to be almost all bonds. It doesn't matter whether right now, say you got mostly technology, go-go tech stocks,
right,
and the market's blowing up and it's like a tech wreck of 2000 or 2008 financial crisis, your stuff is just getting creamed.
Right.
And likewise, if you go into the bond time at the very end, if we have really high inflation or rising interest rates, the last thing you want is bonds. So it doesn't matter.
Right. So
it really is what's in the economy, not your age.
And let me build upon what Danny's saying here. So since 2008, so if your target date fund, like if you're getting older, and we've touched on this, because in our shop at Revere, we're flexible. We Our mix is 70% fundamental, 30% technical, always, always, always with the sell discipline. I rarely say the word never, okay? Because never is an absolute, and there are very few absolutes in life. This is one of them. At Revere, you will never, ever get 2008'd. And you're like, well, how can you prove that, Tim? You don't know anything. Well, one, thank you for listening, person that doesn't like me. Two, look at how we handled March of 2020. That started setting up in the end of February, and you can go back and watch the videos, and Don and I just talking about what's coming, what's processing. You can see it in real time. You can go back and we send you the videos.
And you may miss out on a few rallies to the upside. You just don't get creamed on the downside. Yeah.
What's more important, what's more important, stock nerds, and I want you to hear this. Oftentimes, you're just concerned about gains. Might I suggest that you concern yourself more with the return of your principal? Because it doesn't seem like you'd want to be concerned with the return of your principal when markets have gone like a hockey stick up. There's going to come a moment in time where it's going to sell off substantially.
Hockey stick down, yeah.
And it doesn't have to be a crash. If we got a 30% correction, and then
well, that's pretty close.
Well, hold on. If we got a 30% correction, but not like the elevator,
50, you're right.
Not like it was in March of 2020. I just meant gradually, and then it buoyed up.
You're talking about a bear market.
And it buoyed back up to just a 15% loss at the end of the year. If you've got $1 million in retirement, whether or not it buoys back up to 15% losses, a 30% loss means you're now left with $700,000. How do you feel with $300,000 less? Well, the quickest way to figure that out, get a target date fund. To figure that out, go index only with no sell discipline. Here, we pride ourselves on always knowing that, look, we're not going to say you're not going to take some losses, but the losses, Danny, were like 5 and 6% in the month of March when the indices were down 35. That is a great example of what we do here at Revere. So now,
it was 8 and 9% to clarify.
Pardon, I'm sorry. It's been over a year.
Yeah.
So, look, the target date funds or anything that's static, once you sign the contract of an annuity, you're in. For the most part, you're in. You're locked in.
For those commissioned annuities, yes.
Yeah, and what if the facts change? If you, in the last, since 2008, you needed to be skewed heavy equity, not bonds. You needed equities. You needed heavy equities. Imagine the person retiring in 2020, right? They rode that elevator down, and then they didn't have enough equities to make up a difference in their portfolio. Like you look at what's on paper. What about missed opportunity? It's tremendous. And this is the problem. There's two problems with annuities that are, especially annuities that have this staticness to them, like the one we reviewed. One, they're not sold by, they're insurance salespeople. They're not fiduciaries. That's a big deal. A fiduciary has a sell discipline. A fiduciary doesn't let you get 2008. A fiduciary updates you on the facts. Once you're in this product, and a lot of people treat target date funds like this, like, well, I'm in it, set it and forget it. What happens after 30 years of being, or 25 years of being in a target date fund? What happens if the target's not hit? You just missed 25 years. And now what I'm about to say is sad, but it's true. There's a number of people that listen and they call us, and they've missed their targets. And now they're sweating. And look, we're not going to take exponential risk for you to make up 25 years. What we're going to do is apply our methodology, 70% fundamental, 30% technical, and a rigid, undeniably successful sell discipline to make sure that no harm is done to you, or very, very little harm is done to you. But these annuities can't do that because they're not fiduciaries. They're salespeople. their insurance salespeople to be specific. And so whether you're in a 70-30 split, whether it's equities or bonds, bonds or equities, whether they put you in a target date fund, none of it matters because there's not anything in your life, stock nerds, that is static. Ford Pinto was a great car until it wasn't. Your spouse was a great spouse till he or she wasn't. The facts change. And you need adaptability and flexibility. And these people and these products don't offer that to you, but they don't care. And just one more fireside.
And they're very expensive.
Well, just one more fireside chat note before we go to Hunter, which I promised in 27 minutes. And we wrap up. We go Hunter quickly, Alex quickly.
Alex Hunter's having a few technical difficulties.
Didn't know that. Oh, that's what you were saying?
Text, yeah. Mm-hmm.
Oh, I can't.
I know.
Yeah,
That's
I
why
appreciate that.
I'm your wingman, baby. I got you.
Well, I miss Hunter.
That explains why he's been so still.
by the way, I would like to clarify one comment you made that's not quite correct. You said not all fiduciaries have a sell discipline.
Oh, okay, there you go.
Fiduciaries just mean they represent you, and they don't work on commissions, and they don't sell expensive products,
right.
surrender penalties, whatever. You can be a fiduciary and believe in your heart that if you do that asset allocation model and pie chart, you'll be okay at the end of the day. We don't.
Right.
We have a sell discipline, but so some fiduciaries have a sell discipline. A whole lot don't.
Right.
So I just wanted to clarify that.
But the person who...
but you want a fiduciary.
Right. You like when you have something that ails you, whether it's your heart, your liver, your kidneys, your stomach, you're sick.
You don't want a doctor that's going to make a huge commission on the thing
No,
he's going to put in your heart.
Let's do it even more simple.
The pacemaker. Oh, I'm going to use this pacemaker. I get a big commission on it, and it doesn't work as well.
You could use your example, or I was going to say you don't take your health ailments to your auto mechanic.
Right.
Why are you taking your fiduciary issues to an insurance salesperson? That genuinely makes no sense to me. One last.
Some people don't know.
Well, that's why we're talking about it, and this is why the Fireplace, as we gather towards the holiday season, and people inevitably want to talk markets or crypto or whatever you want to talk about. I choose to arm stock nerds with interesting information, fact-based information, that they can then choose to engage with anybody they want to around the dinner table, the coffee table, the coffee table is a good place to engage people. Now listen, coffee talk. One last thing. You don't realize it when people talk annuities or they talk insurance products, right? There's something called the surrender penalty. If you're not familiar, it's ridiculous. You have to pay a penalty to get your money back. That's what it is on the surface. If you want to know how much the salesperson is making off of you and how much of your money is not going towards the investment.
Up front on day one.
How much of your money is not going towards being invested. Look at the surrender penalty. The surrender penalty is the commission. Well, Tim, what do you mean? Well, you see, the house, whether it's Lincoln Financial, whether it's State Farm, whatever the insurance company is, the house never loses. So they paid the insurance salesperson the commission.
Up front, yeah.
Should you leave before the house can make back their money off of you, they're going to get their skin and then some by making you pay a penalty. And that, my friends, should absolutely, positively be illegal, in my opinion. So with that.
Well, now one more. So there actually annuities out there that are no commit. Not that I'm still a big homer for those. I'd still rather have the money just in a brokerage account. But there are annuities that are no load, no commission fee, very low cost structure. You never hear about them because they're not big commissions and they don't make a bunch of money.
Lincoln Financial
and they've got to actively manage them. They got to watch them, and they don't want to do that.
Prudential ain't talking about that. Get a piece of the rock, my butt. Like they're not going to tell you that.
Pet rock.
Yeah, pet rock. All right. So with that, stock nerds, we leave the warmth, the glow of the fireside, and we go to.
Oh, Hunter's back on. Is he working?
No.
He's not. That's a still picture. All right.
And we go to
Alex.
Alex.
Looks like he's hard at work, though. Like he looks like he's really working at it.
And we go to Alex. Alex, what you got, brother?
Yeah.
Yeah, so I'm going to go over a couple of things that Hunter wanted me to go over for
Sure.
him. And
No
if you
worries.
could pull up SOXX, which is the semiconductor
Yeah.
ETF.
Here we go.
And he wanted to talk about the disparity between that, ITB, and IYT.
Mhm.
And then you could pull up ARC, and you could see how some of these groups have been very strong. Meanwhile, these high growth speculative names have been getting blasted, like an ARC fund would own.
Right.
Um, so that was something we wanted to pull up. Also, there's been a flight to safety. If you can pull up the DIA, which is the Dow Jones ETF,
Mm-hmm.
and then if you compare that to IWM, which is the Russell 2000, the Russell 2000 also, I was going to go over this too. I'm glad that Hunter brought this up. This is, to me, it's a under the radar bear market, because if you go from February to now, it hasn't done anything, and then that's under the 200-day moving average. If you have any chart and your price of that, whatever you're trading or looking at, is under the 200-day for a good amount of time, like this is, to me that's bear market for that particular, for the Russell 2000. Now the S&P 500 is near all-time highs, so there's a massive um, division between these big, like you were talking about before, with like the Apples and the Googles
But not the
of the
equal
world
weighted
moving up.
S&P.
right.
That's the point. Yes.
Yeah, not the equal weighted. Like I, so yeah, that's what he wanted to talk about, is that disparity between, IYT, SOX, and then compared to ARC and then IWM with the Dow Jones. So just indicating that there might be some flight to safety going on, and maybe Apple is kind of like that play too. Maybe these people and funds are buying Apple as a protection against, a little bit of a choppier time, because it's so liquid and it has such a big cash hold. I think, what do they have, like 900 billion in cash on hand, 800 billion, something crazy.
They got
So
some
their
change.
fundamentals are,
Look
yeah, they
at
got
this.
some change. So
Alex,
it's pretty rock solid.
Look at this disparity. Look, I was just looking at the contracts. You can see the contracts here being bought right now and sold, and that's moving. And then I'll move the marker, and you can see the average. Excuse me, the average is next to it. What the average contract is.
Interesting.
Yeah, and so, but look at the volume. Look at the volume on the down days here, and we'll just count the last 10. So here,
Distribution. That's what distribution
yeah,
is.
this market is distributing, and that's the whole 1, 2, 3.
We talked about this last week, and if someone was watching, they would have, maybe not bought into this rally, and realized that, and then Dan brought up that fact that some of the biggest up days in markets have been during, corrections. Now, here's the thing: we haven't even gone down 10%, so the label as correction isn't even technically correct. So it's very hard. It's just a choppy, very choppy, volatile market. I mean, VIX got to extremes last week. I think we peaked around, what was it, 32. Now it's back down to 20, which is the volatility index. If people don't know what the VIX is, VIX. The put call ratio got up to 1.2. That was showing extreme fear, which is when people buy puts. A put contract is basically you're saying the stock's going to go down. So it's the vice versa thing. So if those get to extremes, usually the market comes back a little bit, or we get a bounce because things are oversold. Now that we've digested that selling, do we go back down? I don't know. It does appear that way, because it looks like we're hitting some overhead resistance. I don't have many individual names, because nothing's setting up with a good risk to reward. I'm not seeing an edge. I need an edge to want to really get some conviction and really buy a stock to potentially make a profit on. So Apple, Google, these big techs, I'm watching those, because now Apple's extended, and like you said, if that starts to, I don't want to say the word crack, because that just, I'm not trying to make it sound like create fear, but if that breaks, then like you were saying, that could weigh down, and those stocks without fundamentals, all those ARC type names, those are going to get whacked first. And they've already been pull up a name that has fundamentals. Look at Square. This has been on a downtrend for months.
Yep.
This is a horrible looking chart. And then CrowdStrike, that's another one. And this is why I say that Russell and some of these that looks like a bear market chart, and you would never know looking at the S&P 500 that a great name like that, like it was last year, is in such a bad downtrend. So I think all we can really go from here is just keep watching, your individual names, watch the overall health of the market, and you can't just buy and leave it like Tim was saying. And this is why it's so important to have maybe a fiduciary, an active manager, help you out if you need that help.
I'll tell you what, that is a great point. Was that all you had, Alex? I'm sorry. I didn't mean to cut you off.
Yeah, that's it.
Awesome. Okay,
No,
Danny,
that was it.
here we go. Normal outro. Now do the short one, okay? Normal outro. And then it's the same outro every week, folks. Every time I say Danny, do the short one, and that's the joke. And then I've got one last thing. I'm going to give people one last thing they can do to put themselves on the right side of the trade.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. You can find all of our information, our research, and our short market videos every day the market was open going back years. You can reach out to any of us if you got any questions or comments, want a complimentary portfolio review, or just have topics you want to talk about on the show. Just go to Dan at Revere. You can email Dan at revereasset.com, Tim, Don, Hunter, or Alex at revereasset.com. And you can always call us old school at 855-REAL-WEALTH.
Two things. So someone might say, Tim, this trading community, how do you get involved with it? These people that follow the work we do at Revere with Hunter's videos, Alex's videos, Don's videos, and the podcast. You just email me. I can introduce you to the people that administer the group. There's no ownership of the group. It's just they just administer it. Someone has to administer it. Look, not a tout service. I want to make sure I make that clear. It is a learning, enriching each other environment. Now, Alex had some really interesting things here talking about CrowdStrike and Square. We're going to do this drill together. I used to teach this. Maybe I'll teach it at the end of the year again. I used to do the 4 questions when I worked at IBD, where I created these 4 questions that really keep people on the right side of the markets. But I also used to do this, and then I was made fun of this, and then I still did it. Because I think it's helpful to understand when there's distribution. So you can do people saw me doing this just a few seconds ago on a daily chart of the indices, but I've got a weekly chart up right here of crowd. And so we're going to count back 10 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right there is 10 weeks. How many weeks? And then what you're looking at, green bars would be accumulation volume above this line. This line is the 50-day simple moving average across my volume, okay? So I'll just keep drawing it across. How many green bars do you see in the last 10 weeks of CrowdStrike? Above that, none. And then how many red bars? 3. So like if you're, and someone would say, Tim, well, what's the purpose of this? Well, let's say you really like CrowdStrike. Like you've done the research on CrowdStrike and you're like, I need to own this stock. Why would you own it? When the people that control the market,
institutional money are selling
it. And that's the whole point of this drill. It gives you a fact-based look at what distribution is. And when they say someone's trash, excuse me, is another man's treasure. No. Someone's trash is your trash too.
on this
in this case, we'll do one more.
In the markets, yeah.
Yeah, in the markets, someone's trash is your trash. Don't go dumpster diving. So here's Square. Well, let's get Square up here. I'm going to drill in, and this is the last one we'll do. And so we'll count about 10 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. That is the 10th week right there. You've got 2 selling weeks, no institutional buying weeks. And by the way, what constitutes an institutional selling week and an institutional buying week? You have to get over this 50-day simple moving average for volume. And you can like Square, you can use Square, but
it's just the facts that big institutional money's not buying right now. That's it.
Do you want to? Okay, this is the last thing. Consumer alert. Zach, cue the consumer alert. Thank you. Consumer alert. Holy hell! I'm not making this. So I don't use Venmo, but I use PayPal. Mm-hmm. So Venmo, like I got an offer from PayPal. Venmo is owned by PayPal. So I got an offer from PayPal. Hey, will you sign up for Venmo and we'll give you $10? And I'm like, yeah. Like, no, I'm not above picking up $10 from the street if I see it, right? If it's just laying there by itself and it's lonesome.
Free Chipotle burrito.
Right. And well, I was just going to buy some crypto with it and see like if I never ever touch it, what it is. You know what I mean? Like you see, he bought $10 worth of Bitcoin in 2012, and now he's a gazillionaire. Like, could I do that? Maybe. And so I bought some crypto with it, and I never used this Venmo app, but this is the one time I did. I'm looking at it like, where do I find where how to do this? You know, I like, what's the price of the crypto? Like, where do I buy it? Oh my gosh, Daniel. Every one of my contacts, I figured it out. I didn't realize it when I permissioned Venmo, just like, just like how many people do. Every one of my contacts' purchases through Venmo was listed in my feed in Venmo.
Yeah, they're all public.
Oh my gosh,
Yeah.
this is dumb.
Yeah,
This
I mean,
is-
you can set them
You
private.
can-
No,
But
I
you
said
can make it private.
I made it private, but I don't think people know.
A lot of people probably don't.
No, and this is why it's a consumer. Cue the consumer alert music. Thank you. This is
heart
why
really
it's a
stopped.
consumer alert.
Yeah.
Because I'm not saying people want to know your like maybe you got nothing to hide. Well, who cares if they know I go shopping at the Piggly Wiggly?
Yeah.
Fantastic. But maybe there's something you don't want out there. You should, if you're using Venmo, there is a social feature in this app that they ain't telling you. And by the way, if a consumer, or if a data miner is wicked smart, what they're going to do is they're going to buy a bunch of your contacts off the dark web, okay? And they're going to make them their contacts, open up Venmo, and they're going to get data, and then they're going to start mapping the data, and then they're going to sell the data back to listen. Data's the new oil, people. Look, if you don't want people to know who you're paying, what you're paying, you make fun of me, Daniel, but I'm going to give you the worst example I could think of.
Oh, I've already thought of 5.
Jerry Springer,
Okay.
the former mayor of Cincinnati.
The man, the myth, the legend.
The reason why he was the former mayor of Cincinnati is because he paid for a service with a check.
Okay.
The 1980s version of Venmo.
Right.
You don't pay for certain services with a check.
Yeah.
You might want to bring cash to that transaction. No,
I can
no.
only
As long
imagine
as
what
you
you're
still
talking- I don't know what you're talking about. but
by the
I can
way,
only
if anyone-
imagine
I know what
you're
you're talking
that
about.
that might be a very valuable canceled check if anybody has that in a collection.
Yeah.
But I digress.
Go give that a Google.
Yeah, there are certain things you don't want. Like, it's just privacy, man. Like, I don't know why that's a feature of this app, but it shouldn't be.
It's
Like,
weird. I set almost everything to private. Yeah. I mean, even if I'm paying my buddy for pizza, I'm like, I don't want people to know I spent $12 on pizza at my friend's house.
Oh, I
Like,
don't
that's
want, like, you know what, they're
dumb.
going to look at me going, hey, fatty, why are you spending $10 on pizza?
Yeah.
You should be eating more lettuce.
That's right.
Like, if anything, I would put the social thing back on
Yeah.
and, like, lettuce, kale.
True.
Like,
It's perfect. Kids these days.
yeah, I'd let people, wow, Tim's really eating healthy here. By the way, who's studying my purchases? It's crazy. So, anyway.
Insurance companies.
All right, Daniel, take us home.
We'll talk to you next week on Your Money.